this is the precise moment gold is supposed to fly. Instead, it's collapsed more than 25% from its all-time high, broken clean through its 200-day moving average, and the biggest banks on Wall Street are now slashing their forecasts. So, what on earth is going on? So, the obvious question is, why is gold falling when every headline says it should be soaring? And the answer comes down to two words that govern the entire market: opportunity cost. Now, gold has one fundamental weakness as an asset. It pays you nothing. No dividend, no interest, no yield. Right now, the US 10-year Treasury yield is sitting at around 4.4%. And once you strip out inflation, the real yield is sitting at roughly 2.2%. In other words, a government bond will now pay you a genuine inflation-beaten return just to sit there and wait. So when a bond pays and gold doesn't, the money flows toward the thing that does pay. It really is that simple. The era of easy money that fueled the rally is over. This is the single biggest reason capital is fleeing. There is a whole stack of secondary pressure piling on top of this, and the first is the dollar. The dollar index, or the Dixie, has climbed to around 101, its strongest level since May 2025. And that matters for gold because it's priced in dollars across the entire world. So when the dollar strengthens, gold instantly becomes more expensive for every buyer outside of the US. A stronger dollar crushes demand in places like India, China, and across the emerging world. As one analyst at Saxo Bank put it, gold is firmly on the defensive, and it needs the dollar to lose momentum before any recovery can even begin. And then there is the problem of the ETFs. Gold has lost the narrative. Today, that mindshare has been hoovered up entirely by the AI trade. The JP Morgan is talking about an AI infrastructure supercycle with projected spending of $5 to $7 trillion by 2030. So if you are a speculator chasing the next big thing, why on earth would you park your money in a metal that just fell 30% when there's an AI gold rush happening next door? The speculative money that used to flow into gold is now flooding into semiconductors instead. And on top of all of that, the original spark for the rally has faded too. When the Iran conflict then erupted in late February, it added a further safe haven bid, briefly pushing prices higher before a ceasefire unwound that premium and compounded the sell-off already triggered by shifting Fed expectations. As one Bloomberg strategist put it, gold is losing its safe haven status to US bonds. So we have rising real yields, a hawkish Fed, a surging dollar, trapped ETF sellers, central banks dumping, and a speculative crowd that has run off to chase AI. But there are still some serious reasons for optimism around gold because while the speculative buyers and ETF holders are panic selling, the world's central banks are buying with both hands.